Folks, Dick Moran here with Consumers First Mortgage, bringing you another Consumer's Moment. Thanks for tuning in. Well, you got to give credit where credit is due, and that's what our topic today is about: credit reports and credit scoring. You know, everybody has, I think, has recognized by now that the credit score requirements on loans have changed. What was once good credit, 680 credit scores, is now a thing of the past. The best scores today, or the desirable score for financing, is 740. Anything from 680 to 740 actually carries with it a penalty, if you will, or a fee associated with the additional risk it presents to the loan package. That fee can be anywhere from 50 basis points to 175 basis points of the loan amount, typically paid at closing. Well, as a broker, we can build that into the rate, though we typically suggest if the customer has cash available that they pay it themselves rather than finance it over a 30-year period. Well, that 680 score or the 740 score is one of three driven by the three credit repositories, and each of those credit repositories has their own little black box that they calculate those scores in. I'm not sure how it works, and nobody is. But anyway, we each have three scores, and as a lender, we throw out the high score, we throw out the low score, and we run with the middle score. And if there are two borrowers, we use the lower of the two middle scores, trying to be statistically correct in the analysis of credit with these particular borrowers. Well, what do we do if scores are low? Interestingly enough, at Consumers First Mortgage, we invest right up front with every customer in a product called Credit Assure. Now, Credit Assure gives us an indication of positive or negative movement in credit scores if a customer does certain things relative to their credit profile. That could include paying off some delinquencies in the past. It could be paying down a credit card to 50% or less of the outstanding balance. A variety of things. We learn that, and we learn the potential, as I said, by using the Credit Assure program, which we buy with every credit profile. In this instance, the borrower had a potential increase of 15, 56, and 80 points on each of the repositories' scores that were represented. Unfortunately, those movements only brought the scores to 587, 634, and 559. Nowhere near enough to be able to accomplish the financing, because if you recall, we throw out the high and low and we run with the middle score, and in this case that would be 587, well below the 640 desirable 620 minimum score that we can finance through any secondary market outlet. In the instance where the resulting change in score is positive, we have another mechanism called a rapid rescore, where we take the customer through an exercise of changing their credit profile by making the reductions or paying off the items that were necessary to affect the higher score. And then we ask the credit reporting agency, the bureau that we use, to rescore. And they do, and typically that can be done within a week or 10 days of the activities that result in the higher scores being achieved. So the rapid rescore is a means to move somebody from disqualified to qualified in a very short period of time, and we know the potential of that by virtue of the Credit Assure software that we buy with each of the credit reports that we obtain from borrowers. These are some of the solutions that you're provided with when doing business with Consumers First Mortgage. We hope you keep that in mind. We thank you again for all you've done thus far this year and last, and we look forward to a great 2012. Thanks again. We'll talk soon.